next session, I think most of us would have worried a little about spending some of our savings on taxes. And a few of us would have even Googled out, like, what are some tricks and tips to save taxes. And at the end of the day, at least some of us would have sat thinking, oh my Jesus, is it actually right to play the tricks to save my taxes? Anyways, I'm not a finance person. I'm not into taxes. We have somebody who has been experienced and who has a good knowledge on finance and taxes, and that's none other than Tito, who's an active JY from Changanasheri, who would be actually taking us through the legal and Catholic perspectives of tax saving. Over to you, Cheta.
Thank you, Therese. Thank you, Amelia, for the wonderful place of worship. My dear friends, a warm good evening to all. I hope I'm audible.
Yes, Cheta, you are.
Right. So this session probably would be a continuation of what we have heard last week. We were discussing how to be a smart wealth builder. So when it comes to when we say, wealth builder, when we are saying how to accumulate wealth, how to utilize the wealth, one of the inevitable part is the taxes also when it comes to talk about wealth or money, the tax. So when we talk about tax, at the beginning, we need to understand what is really tax and why we are bound to pay tax, how the tax is utilized, and is there a way we can, save on taxes? What are the different options of tax saving? Like Therese was saying, more or less all these are very theoretical, sections or definitions, which more or less everybody will be knowing through Google or other YouTube channels where everybody discusses about tax saving plans and investments. But with my whatever experience I have through advising to my clients and how people are saving tax and how they utilize the provisions, some of my live experience might help you for your future tax planning. That's what I was thinking to cover in this session. Probably this session would be much shorter when compared to last week's investment planning session when there are a lot of things to be discussed. I'll take it a little bit slow, and then finally we can go for the Q&A session. So at the beginning itself, let's understand what is tax. Can somebody type in the chat box what you understand by tax? Tax, levy, or probably it's in the screen itself here. The tax is the amount which you need to pay to the government for providing as public utilities and for paying the public services what we use. For example, we use the road, we use the hospital facilities, government hospitals, the children play area. All these facilities are provided by government through the revenue what they earn from us as taxes. So somebody, Joseph is saying amount every citizen is able to pay to the government out of their income. Yeah, that is another definition. We need to pay a part of our income as taxes to enjoy the facilities what is provided by government. The second part of it is for the economy to grow, government needs revenue to provide development activities around business or a smart city development. Anything has to happen through government revenues. So whatever money we are paying, it has a public utility which government helps us to provide every citizen of the nation. So that is when we talk about when we talk about tax, there are three aspects in tax. One is the tax planning part. There is a tax evasion or tax avoidance also. Let's understand what is each of these happens. So let's first take the tax avoidance. How people avoid the tax. One is that there are certain loopholes in the law, which law is once introduced. At the initial times there will be a lot of loopholes, which smart people, smart in inverted commas, use these loopholes to avoid taxes. For example, in a case of a couple where the husband is earning income by salary or business, he does investments in his wife's name or accumulate wealth in wife's name, so that the wife doesn't have any income, doesn't pay any, files a tax return, so he invests in wife's name. So that is a method where people try to avoid tax payment. There is another law which is very interesting. In India, if you see, probably prior to our COVID and lockdowns, you might have seen the weddings happening. Extravagance of weddings happening, where a lot of gifts are given to the wedding child or groom or bride. Why? Because there is a law which says if any gift is given at the time of marriage as part of wedding, as a wedding gift, is avoided from wealth tax. So a lot of these people who have earned unaccounted money, or rather we call as black money, they spend a lot of money during the wedding time and give huge gifts like BMW, Mercedes-Benz, or a lot of gold as a gift, is just to take the advantage of this loophole in the law, that the wealth tax is not applicable when there is a wedding gift during the marriage happening. So these are some of the areas which people use to avoid tax. There is another thing like tax evasion. Tax evasion happens, it's an activity where a person deliberately avoids paying his tax liability. How does he does that? For example, if he's running a business where he has, say, 5 lakh rupees of income and 1 lakh rupees as expense, he over accounts like spending more expense and showing less income and avoiding tax. That is tax evasion. There are people who do business using more cash than bank account transactions, so that the cash transaction is avoided from tax liability. These are the another way of avoiding tax, which we say as tax evasion. So tax evasion as well as tax avoidance both are illegal, which we are not going to cover in this whole presentation. What we are going to talk about is tax planning. Tax planning is an exercise undertaken to minimize your tax liability through the best use of legally available allowance, deductions, exception, etc., to reduce our tax liability. So government, in a legal sense, in the Income Tax Act, it is providing almost 200 sections or laws to give you allowance or deductions or exemptions to claim on income tax, to claim on your income, so that you can pay less income tax. So these sections are provided legally for all the citizens, depending upon their category of income tax or the age bracket or the status of their citizenship. They can utilize these tax provisions to pay less tax. So that is where we need tax planning, because we need to understand the different laws, different provisions where we can save our income tax. Most of us, I believe, are salaried class in this group. So in salaried cases, the tax planning part, when we talk about most of the cases we see, when the HR manager comes up for asking for your investment details, many of them run around, find any LIC agent or a insurance distributor, just signs off some papers, and there ends the tax planning. It is not like that. Basically, tax saving through investments is just one element or one section. Rather, there are multiple sections where we can very prudently utilize to reduce our tax. When we are rushing in the last minute, what happens, like, most of the cases, the investment advisor or the planner would be pushing us to sell, or rather pushing us to buy some product which gives him more income. So that is another trap where we fall in when we do this last minute rushing. Rather, what we have to do is, in the beginning of the year, so when the financial year starts in India, the financial year starts from April of every month, and ends at March 31st. So during a financial period, if you plan in the month of February and March itself, from April 1st onwards, what could be my monthly savings on different tax sections, then it makes life very easy. By end of the year, when your HR manager asks, or when your tax filing authority, like your chartered accountant, the tax consultant, asks for the proof of investment, then it is very meticulously done. You are having an optimal utilization of the tax provision. So let's one by one, just see what are. So when we talk about paying tax, there is a beautiful Bible verse which clearly says why we need to pay tax. It's from the letter of Romans chapter 13. It says, "This is why you pay taxes, for the authorities are God's servant, who gives their full time to governing. Give everyone what you own him. If you owe taxes, pay taxes. If revenue, then revenue. If respect, then respect. If honor, then honor." So it's Bible clearly says, government is meant for governing us. If government asks for taxes, you have to give taxes. If government expects respect, we have to respect government. If honor, then honor. So as a Christian, as a Catholic, this is clearly said that if you have an income, you should pay a part of it as taxes, and taxes has to be paid in fully. So let's see what are the objectives of tax planning. When we talk about tax planning or paying tax, what is that objectives we get from tax planning? Because many people, there are a certain class of investors who say, "Oh, why should I bother in tax planning? Because end of the day, it is I am bound to pay. Let me bound." There are people like that. They don't claim on any of the sections or exemptions. They just pay whatever tax comes. But the issue is, many of these exemptions you take, there are cases where government is encouraging us to save on our income by claiming on these exemptions, because in a way, this saving habit is encouraged by government by giving exemptions. So we can see how it helps us in tax saving, or saving of our income. Also, tax saving is nothing but saving of our income when we pay less tax. So one is, as I just mentioned, reduction in overall tax liability is what the primary objective is on tax planning. The economic stability, when we are paying a tax, the economy develops by providing more public utility, public facility, and development of economy happens based on the tax what we are paying. Similarly, growth of economy is related to stability of economy. The economy grows when more taxes collected and more projects are launched by government. Litigation minimization, because if many a times what happens, like, government sends notices to people who have not paid their taxes properly. When we are least bothered about tax planning and filing, what happens, like, government tracks our some of our financial transaction through our PAN card or our credit card transactions, and even air ticket booking also is sometimes considered as tracking your tax filing, because what government looks at is somebody who does a air travel and hasn't paid his income tax or filed his income tax. Government means anybody who's using a air travel is from the upper class, or who has substantial income to travel by air, so then he has to pay the income tax. So they many a times send the notices. So a proper tax planning also reduces our tax litigations. Then productive investment. This is something which I told you. When we are claiming on exemptions, we are forcefully doing some investments and savings, which will help us in our long-term, sustenance and long-term development. This is something which we need to understand. There is a concept called exempted income. Then there is a deductible income. Exempted income basically are incomes that are not chargeable to tax as per income tax law. For example, your HRA, house rent allowance, then agriculture income. Till now, still at certain limit, your dividend income from your companies, a partnership, if you are a partnership investment, the income from the partnership, all these are exempted income. So theoretically speaking, you should always look for exempted income when we do investments, or when we are trying to earn income from other sources. Always look for exempted income, because exempted income is completely exempted from income tax. For example, if you are a person who has, say, around about 10 lakh of salary income, there is a say 2-3 lakhs of agriculture income, 2 lakh income from your partnership or company, as a whole it will be 15 lakhs. But out of this total 15 lakhs, 2 lakh partnership income is exempted, then the 3 lakh agriculture income is exempted. Then you have to do a tax planning only for the remaining 10 lakh, which comes as the salary. And when it comes as salary, then you have to look for the deductions on this salary, which all sections gives you deduction to claim on your salary income, so that you can bring down the slab of your income. So deductible income is something which government encourages savings and investment among the taxpayers, like investment on section D, C, section D, and etc., which we will be discussing in the subsequent slide. So always keep these two important concepts in mind. One is the exempted income. Always try to increase your exempted income source limit, and look for deductible incomes from your salary and other taxable source of income, where you can avoid paying taxes. Okay. Now let's look at the two tax slabs available. Till last year, the budget of 2020 introduced a new tax regime, which gives the individual taxpayers to opt for their tax slab. One is the old, which is now known as the old tax slab, which is saying up till income of 2.5 lakhs, you don't have to pay your income tax. That is a standard deduction. Then income between 2.5 lakhs to 5 lakhs, it is 5% of your total income. 5 lakhs to 10 lakhs, it is 20% of your total income. And above 10 lakhs, it is 30% you have to pay as income tax. In this new tax regime, there is a small difference. government is providing this more liberalized tax bracket, which is, a 30% tax bracket happens beyond 15 lakhs of income. Beyond 15 lakhs of income only you have to pay 30%. Otherwise, in the other case, it is beyond 10 lakhs. But the difference between two slabs are, in old tax slab, you can claim on the exemptions provided under ATC, ATD, different investments, exemption. You can claim on that and pay the tax according to the slab, earlier slab. But in new tax regime, the tax slab was more liberalized. But the catch is you cannot claim on any of these exemptions. That section, investment exemptions, which is provided by government, cannot be claimed under this new tax regime. So, in simple terms, the general thumb rule is like, if somebody is getting onto salary income and who has not done any of his investments under the exempted income sections like ATC or ATD, when the HR calls up and asks which tax slab you want to follow, whether the new tax slab or old tax slab, the answer is simple. You can opt for the new tax regime because you haven't done any of your tax saving investments. That is clear, right? Are you clear with that clause which I just mentioned? You can just chat in the chat box. I'll just repeat. Any of you who have joined as new to an employer and you have just started earning, then the best option to opt is the new tax regime because you don't have any exemption savings or investments which you have made. But anybody who has already done Section 80C, 80D investments, which I will be talking in the coming slides, the best thing to option is to stick on to the old tax regime itself. Then another option could be people who are into businesses like proprietary business or other small business entities. It is better you go for the new tax regime because in case of businesses, you don't have the provisions to claim on the exempted investments like ATC or ATG. You can very well go with the new tax regime because you can save a lot on the taxes. So business income people can opt for the new tax regime. So this is something which has come new, which is applicable from this assessment year. Assessment year 2021 to 22 is where this new tax regime is applicable. Hope you understand the concept called the financial year and assessment year. A financial year is the current running year. Like for example, currently we are in 21 and the assessment year is 21-22. Because when we are doing the income tax assessment, we will be following the assessment year 2021-22 for paying the income tax which we have earned during the financial year 2021. That is the concept of assessment year and financial year. Let's look into the tax saving options. There is a question from Paul Joe, which I will answer after this session. I'll just give a couple of minutes. When we are talking about tax saving investments, there are a lot of commonly heard sections like ATC, ATD sections, which, so in simple terms, a very important section to understand is this ATC section where majority of us will be claiming on the investments what we do. For example, the section provides us tax exemption on investment done into an equity-linked savings scheme called the ELSS scheme in short form, where it's a mutual fund scheme provided by all the mutual funds, where if you invest into that particular mutual fund scheme, you will be exempted from your total income to pay tax. When we talk about ELSS scheme is a 3-year lock-in scheme provided by the mutual fund, wherein once you invest into that, 36 months you cannot withdraw the investment. But as it is locked in for 3 years, the probability of getting good returns from the scheme is higher, because minimum 65% of the investment is invested into stock market, stocks, where the scheme can even go up to a higher limit of 80% or 85% in case of ELSS. Then PPF. When you are an employed person, you have a PF account called a Provident Fund account. Similarly, any person can, whether he's an employed or a self-employed person, can open a public Provident Fund, wherein your investment, the initial investment is locked in for 15 years, but you will get a slightly better return than your bank FDs. After 15 years, then you have to renew it for every 5 years, wherein interim withdrawals are not allowed, or death has to happen, or the term has to end, wherein you can put back your maturity amount. The attraction is that the maturity amount is also tax free. Then employees provident fund is similar to your PPF, wherein employee pays a part as well as you also contribute to PF, which either on transfer retirement, you can withdraw from your PF account. Then our insurance plans, any traditional or unit linked insurance plan is exempted under 80C. National pension scheme, which is over and above your 80C, because 80C has a ceiling of 1.5 lakhs. So all your investment put together under 80C should be within 1.5. You can do more, you can do 2 lakhs or 3 lakhs, whatever it is, but to the maximum of 1.5 lakhs only you will be exempted from section 80C. Similarly, NPS, National Pension Scheme, is over and above your 80C, another 50,000 rupees is exempted from basically your income if you invest into national pension scheme. When we talk about national pension scheme, it is a little bit long-term investment, where at the time of attainment of age 60, I think 55 or 60, bit confused. You will have to take at least 40% as the annuity. Annuity is nothing like pension. There is a percentage calculated which will come as pension for you. Then national savings schemes of post office, 5-year deposit of post office, which is again, giving you assured return of around about 7%, which is better than your bank FDs. Then among this, one thing you have to notice that your PF account, the PPF account, the national savings schemes, all the three are government related investment, wherein government guarantees this investment. In India, there is a situation that many of our banks cannot be trusted. A lot of banks are getting merged, a lot of banks are getting into problem of bad loans. But in case of PF, PPF, and national scheme savings scheme investment, it is backed up by government guarantee. So it is a highly secured, highly guaranteed investment when we talk about PPF and PF and national schemes. Again, in 80C, you have your children's tuition fees you pay in school is exempted. Then the principal amount of housing loan also is part of 80C. So all put together in 80C is 1.5 lakhs, and NPS is additional 50,000, which you can claim under tax plan. Then we have section 80D and 80DD, wherein a health insurance of up to 25,000 rupees is exempted, and another 25,000 for your parents who are under the age of 60 if you take. So all put together, both together, it is 50,000. Additional 50,000 can be exempted from your taxable income. This is the important section which you need to be careful, because many a times I have heard that when you are employed, your employee provides you insurance coverage, right? So many of them say, I don't want to take a health insurance because my employer is providing. Here, one important clause you need to take care is What if you resign from this company and join another company? The new company will provide. But if there is a gap between this date of resigning and date of joining, or if you are getting terminated from your current employment and you fall sick and you are hospitalized, then you are into trouble. So I would recommend always to have your own personal health insurance taken additional to what you are having from your employer. Why? Because at young age, your premium on your health insurance would be less, because as you go older, you think like, after 40 years or 45 birthday, you go for a insurance. Many of the insurance company will charge you high premium because you are joining at a older age. Then you will have, if you come across some health issues or some exception cases where the insurance company could reject your policy also. So my good advice to you is, when you start your career, when you are on your first job itself, please get on to your own personal health insurance by paying a premium, so that over a period of time, either your health insurance premium should come down or the coverage increase, because there are different types of products where some companies give you have to pay the same premium every year or increased premium every year. But if you don't have a claim in a particular year, they will give you a enhanced insurance coverage on your renewal. So whatever is the case, I will always suggest, apart from your employer insurance, always have your additional insurance coverage also. And if your parents don't have any insurance coverage, please do take a insurance coverage in their name also whenever you starting your career or start earning. That could help you to give additional exemption. Then exemption through your education loan. So the interest what you pay on your education loan is exempted under 80E when you are taking an education loan for yourself or your spouse, your children, or as a legal guardian for your legal child. Then the interest part is exempted. It is said that up till 8 years, or from 8 years, or from beginning of the loan repayment, or the entire interest period, whichever is earlier. So maximum you can claim on this is for 8 years on your education loan. Then there are sections like 80E, 80EAB, which gives you your housing loan interest. There are certain calculations provides you 2 lakh of housing loan interest exempted, or 2.5 lakhs, whichever is the cases. Recently, if you see the electric car loan, if you have the interest on electric car loan, is also exempted from your taxable income. Then one important section which you need to look is the donations you do under ATG. Many of these charitable institutions or relief funds gives you ATG exemption. So you need to take the receipt from the donations, which can be claimed under ATG. Jesus Youth has a Jeevan Samruddhi Trust, which is qualified as ATG exempted trust, where you can do your donations and claim on the ATG exemptions. Jeevan Samruddhi Trust does give child education support, and of late, if you see, the COVID relief activities are handled by Jeevan Samruddhi Trust under the name Nalla Elkaran projects, which started during the 2019 flood time. Now the COVID relief activities are going on, so you can do donations to Jeevan Samruddhi Trust to claim ATG exemptions. Just to sum it up, as most of you are salaried class, the first thing to look at is, if you are a salaried person with an annual salary of, say, around about 5 lakhs or 6 lakhs, you claim on the exemptions like HRA, leave travel allowance, children's education, other allowances by company or food coupon and other coupons. So each employer will give you different kinds of exempted income provisions, which you have to first look in. And if after claiming on all these exemptions, if your income is less than 5 lakhs, nothing to worry, no tax to be paid. But if you have a income more than 5 lakhs after the exemption, then you have to start with the provisions. First, the standard deduction of 50,000 at the beginning, the investments under 80C, medical insurance under 80D and 80DD, home loan interest, NPS over and above 80C, donation. These are the priorities you need to have while making your investments, exempted income investments. So this is the nutshell on your tax saving when you're a salaried person. If you have a business income, it's always advised to go through a chartered accountant who will give you better advice to on tax planning, because business income will have a lot of other provisions which has to be taken care, your expenses and other exemptions where you can claim on your taxes. Finally, Bible quotation which is very famous and everybody knows it. In Malayalam we say seasonal season devathinu. So Jesus, when the Pharisees were testing him, asked him, do we need to pay taxes to Caesar? Jesus, knowing their evil intent, said, you hypocrites, why are you trying to trap me? Show me the coin used for paying the taxes. They brought to him denarius, and he asked them, whose image is this? And whose inscription? Caesar's, they replied. Then Jesus said to them, so give back to Caesar what is Caesar's, and to God what is God's. So, my dear friends, tax and tax collection has been there from since Jesus' times, and he is very clear on what has to be done with your payment of tax. So let's not evade tax, avoid tax. Let's plan tax and be a good children of Jesus as well as be a good citizen. With this, I would just take a pause. We can go for the Q&A if you have any doubts or some discussions around tax planning.
Hello.
Hello. Yes.
Chada, can you explain what is HRA, house rent allowance?
House rent allowance is a provision given by your employer, and it is calculated like in. Let me just take that provision like. When you get the salary slip, there is a basic pay, right? Can you hear me?
Yes.
There is a basic pay. There is a HRA part. There are allowances, right? The salary slips have the split there, right? So under HRA, it is basically a employer gives house rent allowance to an employee to take house on rent. Many of times when you calculate the income tax, the total HRA can be accepted up to 5,000 rupees per month, or 25% of the total income, or rent minus 10% of adjusted total income, whichever is less. If your HRA is 5,000 rupees per month, it is fully exempted. You don't have to pay any tax. If it is more than 5,000 rupees, then 25% of your total income, provided your rent is not more than 25% of your income. In case where it is more, then rent minus 10% of your adjusted gross total income has to be paid income tax. So anybody who is having a HRA of rupees 5,000 per month, it is very easy calculation. It is fully exempted from income tax. So 5,000 per month is what? 60,000 per annum will be exempted from your income.
Okay, so I have another question. So the HRA is provided by the company that I work for as part of my salary. So what if I'm not living in a rented house and I'm living in my parents' house? So in that case, I'm technically not paying rent. So is it correct to get that exempted from tax? So I'm just getting the moral background from here. Is it correct to get that exemption if I'm not living in a rented house?
Yeah. See, in case if you are not living in the rental house also, this provision is given legally by the law, because many of the times the employer nowadays gives you a salary package which is called as the C2C, right? Cost to the company. So in case of company also, to calculate your PF and all, they will keep the basic pay less and give you HRA more and all those calculations. So legally claiming on the HRA, even though you are not staying in a rented house, is permissible, and morally also is correct, because you are not misusing any loophole of the law or the act to claim avoid tax or claiming tax exemption, right? So that is permissible, is what personally I think. Morally also it's correct, and legally also it's correct. No issues.
Okay, thank you, sir.
Sir, I have a question regarding the gratuity. Could you please explain me on that? Because is it part of the CTC?
Gratuity comes in when you have a 5-year experience, right? When you complete a service of 5 years and above with a particular employer, single. See, it is not like multiple employers. When you are working with a XYZ company, with that XYZ company itself, you have to complete 5 years. So on completion of 5 years, your gratuity eligibility comes up. And when you are resigning, say at 7th year, 8th year, 10th year, or at their retirement after completing 5 years, you will get the gratuity. And gratuity, most of the cases is, I think it is taxable. To my knowledge, I need to reconfirm.
Yeah, it is
I'm not sure.
Yeah, it should be taxable, but is it related to the base pay, or how is it?
Sorry, can you come back?
Yeah, it is an income, so it should be taxable. But what is the how is the calculation? Is it related to the basic salary or?
Oh, I'm sorry. I think I have no clarity on that. Probably a charter accountant could give you a better reply on that.
Sure, thanks.
Chera, I have a question. You spoke about partnerships that can be exempted from tax, dividend partnerships, something like that. Can you explain a little bit more on what exactly that is and how it can be exempted?
Okay. See, in case of partnership, what happens, like, a partner's income and the individual income is considered as one. For example, when you are having when you are a shareholder with a company, the company is treated as a separate entity. Means you are a separate individual, company is a separate individual. But when we talk about partnership, the law hasn't defined partnership firms, partners as a separate entity. It is one and the same. So what will happen, like in case you are a partner to a partnership firm, the profit what the partnership firm makes, there is a income tax that business entity, that partnership entity has to pay. That is a one-time tax which the firm pays. So once you're done with that partnership income tax payment, the remaining amount is the share of the profit which comes to the partners. You understand? There is the income in partnership. There are some expenses. For example, a partnership makes a 10 lakh income. There is a 5 lakh rupees expense. On remaining 5 lakh rupees, the corporate tax is, I think now 25%. You pay 25% income tax on the partnership. So remaining, so 25% of 5 lakhs would be what? 3.75 lakh would be remaining. And you think that there are 3 partners. One partner will get 1.25 lakhs each. So this 1.25 lakhs, what you're getting after paying the income tax in partnership is a post-tax return. You understand what is post-tax return? Because you have already paid the tax at the partnership level. So that profit, what you're earning after paying the partnership income tax, is exempted for an individual. You get it?
My question is, so this partnership at any stage of the company I can join, right? So the moment I join or get into a partnership with a company, I need to pay this partnership tax. That's what you're saying, correct? It's not like at the inception only I have to pay the partnership tax. Is it like that? I mean, what I'm saying is, suppose 4 partners start a company and in between one partner leaves. So they have already paid this partnership tax. Then I join in as a 4th partner. So do I need to pay this tax again, or is it something like you pay at the inception of a company or a venture?
No, during the inception of the company, there will be no income, right? So there is no income tax there. So once incorporation is done, you start the business. Most of the times, in the first year, second year, majority of the companies will not have any profit because there will be a capital investment, more expenses. Then your income starts. So suppose you are joining the partnership firm in the 3rd year or 4th year of its incorporation. So when you join, there is no income tax application because you are putting in money. You are the other 3 partners say that you are coming as a 4th partner. We have already established the business. You give us say this much amount and join as the 4th partner. You do an investment and join as a 4th partner. At that time, there is no income tax implication. But on that end of the financial year, as I said, the financial year ends at 31st March. So when the auditor makes your accounts, the preparation, the profit and loss account and the balance sheet, there is a profit on 31st March. Then the partnership has to pay income tax, and that particular year, as you join the firm as the 4th partner, you will get the share of profit. So when you are getting the share of profit, only the implication of exempted tax comes in. If there is no profit, there is no income tax paid, then there is no issue of this exemption, right? When the firm makes a profit and there is an income out of the firm, then this exemption is applicable.
Okay, I just had one more question. So we spoke last week about stocks and mutual funds. So suppose I have gained a substantial amount from stocks. When I was filing the tax, I saw something called as capital gains declaration.
Yeah.
What exactly is it, and how much? How do they calculate the tax based on that? How much should I declare, and what are the details on that? I mean.
Yeah, that's a good question. Actually, somehow I missed out in this presentation about the capital gain. So capital gain occurs in multiple cases. One is in case of a share investment, stock investment, or a mutual fund, equity-based mutual fund investment, there is a capital gain. Then on sale of a property, there is a capital. These are the 2 common scenarios when you have a capital gain. Then sale on gold, gold bullions also there is a capital gain. So there are other capital gain instance also. So let's at the moment consider the investment into shares, investment into mutual funds, and investment into property. So in these 3 cases, when you are buying a mutual fund, stock, or property, there is no tax applicable other than the service tax or other indirect tax what you make. Direct tax. When we talk about direct tax, direct tax is the income tax what you pay, and indirect taxes are the GST and other types of taxes. So when it comes to sale of a property, sale of a share, sale of a mutual fund, there appears the capital gain. It is nothing like but the profit what you make out of these investments. So in case of a capital gain, in case of property, it is like if you are selling it within 3 years, like you bought a property and you didn't hold it for 3 years, you are selling before 3 years, then 30% out of the profit you have to show pay as income tax, and that gain is known as capital gain, which you have to declare it separately into your income tax filing. Similarly, in case of stock investment and mutual fund investment, there is a separate category under capital gain income, where you have to pay the taxes under capital gain taxes. So basically, if you talk about the heads of income, there are like common heads, I think 5 common heads. One is salary. Number 2 is income from house property. Number 3 is business income. 4th is capital gain out of stock, mutual fund, and properties. And 5th is other income like interest income and dividend income and so forth. So these are capital gain is one among the source of income which we have to declare separately and pay tax separately, which doesn't count under your normal income tax slab, which we spoke earlier, like the 10 lakhs or 15 lakhs slab. It doesn't count under that. It is totally different. So just to add to that, if you are having an income of less than 5 lakh rupees as salary, and you have a capital gain of 2 lakh rupees, the total income is 7 lakhs, right?
Correct.
So on your salary part of 5 lakh rupees, you don't have to pay any income tax. It is totally exempted. But the 2 lakh rupees capital gain, which suppose it has come from a stock investment, which you held for say 1 year, less than 1 year. For example, last year you had a good investment in stock and you earned a profit of 2 lakh rupees within 1 year. Then 15% on that 2 lakh rupees, that is 30,000 rupees, has to be paid as income tax. So in that there is one more provision: up till 1 lakh rupees of capital gain out of stock investment and mutual fund investment is exempted income. Remaining 1 lakh you have to pay 15%. That is 15,000. For example, if you have made a profit of 2 lakh rupees after 1 year, that is after completing 12 months of holding, then it is 10%. So that 15% is 10% in case of stock.
Just
so
one question on that limit. So suppose like I reach 90,000 and I reinvest, like I sell the stock, but I buy something else there itself. Then is it, am I liable to pay that, or is it covered?
Yeah. So the principle followed here is the first in, first out principle, wherein the stock what you bought at first will be considered when you are selling first. So your transaction gets over there. One buy, one sell, it's nullified. So whatever profit you have gained on that particular investment, whether you have been withdrawn from the broker and utilized elsewhere, or that doesn't count here, you have to pay the capital gain. And this year onwards, for your information, income tax sites, government will be publishing your stock transaction and mutual fund transaction separately. That is how they were discussing in the budget. Will come automatically in the system. For in whatever claim they make on that particular transaction, you have to pay the tax according to the government demand.
Oh, thanks, sir.
Right. Those who have typed questions in chat box also can unmute and ask me if I'm missing it out. New house loan is exempted from tax. New house loan is what I mean, already you have a house, and or you are going for the first house. Somebody called EMP has asked this. Can you just clarify that? New house loan, is that the first housing loan you are going to take?
Yes, sir. Actually, I'm trying to buy a new house.
Okay. So if you're buying a new house, the interest what you are going to pay on your housing loan will be exempted under Section 80E with 2.5 lakhs of interest, and the principal, most of the cases at the beginning of the time, the loan term, the principal will be very less, which will be exempted under 80C. So in ATC, if you have other investment, claim under ATC, and interest, you can claim it separately. So to save tax, it's always better at least the first house is taken on housing loan. That is a good provision and a saving habit wherein you can own a house also as well as claim on the income tax also. Traditionally, I have seen many clients go for second house and third house again, pre-closing their existing housing loan and go for new house, seeing that there is a income tax exemption and they give it on rent. But what I have noticed that after considering your tax burden and the rent what you get out of the property, such that roughly it works out to 3.5% only. So for a single house, it is recommended to go for housing loan, but not for the second or third house with housing loan, because eventually you end up getting only 2 or 3% out of the whole exercise. Annie is asking, income tax is deducted in April 2021 pay slip, and any option to get income tax refund by submitting ATG submit. Okay, so what I understand from this question, that already your tax is deducted as per the salary slip which they have issued, but can we get the refund? Yeah, if ATG certificate is issued before March 31st, like for example, March 2021. Before March 2021, if you have done a ATG investment and which you forgot to show your HR, then you can, while filing your income tax return, which normally falls before July 31st, if you make that, you will get the refund. Did I answer correctly, Annie? I'm a bit confused.
Yes. Yeah. Okay.
So any investment, Annie, like for example, sometimes we miss out giving the investment of ATC or ATD, or sometimes we do it outside after giving the investment proof. But only thing you should take care is that all these to consider that particular financial year, it should be prior to 31st March of that particular financial year, can be claimed while you're doing your income tax filing and claim income tax. Refund.
Yeah. Okay. Thank you.
Hi, Jada. Just a question.
For Peter, there is no income tax exemption under personal loan, interest, or principal. It's only for housing loan and education loan, and currently for the electric car loans. Jibin asking, is the
That I have a question. So is there any exemption for internet bill that we paid? Because my company was asking me the internet bills I paid, and they were exempting 50% of that.
If your company is providing you that, one provision for the communication, like telephone bill, internet bill, and all, as per the your offer, then you can submit your telephone bill and internet bill to claim on that. It depends upon your offer and the provision of the company. You need to talk to your admin or HR.
It is not actually a reimbursement. This is a tax exemption. So.
Yeah, there is a provision of 2,500 rupees or something. I forgot the section. It is there, which you can claim under this.
Okay.
Hi, Jada. So I had just typed the question. My question in chat is the amounts exempted for ATG, ATC, ATD. Are those dependent on the annual income tax slabs, like 2.5 lakh to 5 lakh, 5 lakh to 10 lakh, like that? Or is that fixed? For ATC exemption, we can only get exemption up to 1.5 lakh, right? So is that dependent or is it fixed?
You are talking about the new tax regime or the old tax regime?
Old one.
Old one, what you are typing is correct. 1.5 lakhs exempted under ATC. Then you have additional NPS, National Pension Scheme, additional 50,000. Then the medical
insurance, yeah.
insurance. Clear, Anujit? Am I clear?
Yeah. Is that fixed? Like it is not dependent on the annual income salary, right?
It is not related or connected to the slab. It is irrespective of your slab. Even though you have just say 2.5 lakhs and you have a investment of 1.5 lakhs under ETC, you will get exemption. It is not connected. But somebody having 2.5 lakhs, there is no income tax liability as such. You can just do a filing, because always just note down this point. It's to all, like, never avoid a filing. If you have a PAN card, it's always advised to do a nil return filing also. Like, for example, some year, you may have lost your job or there is no income because of a slowdown or something. You may think like, I don't have income more than 5 lakhs. Why should I file it? But it's not like that. If you are a PAN card holder and started earning, it is always recommended, go ahead, declare all your income and investments, file the income tax return. Why? Because at that moment, you may require to apply for a housing loan or a car loan or something. Then the bank people will ask for your income tax filing returns document or the proof. So if you have missed that, then most of the cases you won't be eligible to get a loan. So it's always recommended, if you are a PAN card holder, you have started your earnings, even though you don't have a taxable income, better to file a nil return also. Tax filing is compulsory and mandatory to be maintained.
Hi, Jada. Jada, Nikita this side. I just had one quick question. So, what if there is a job change in between this period of tax filing? Say, till March, I was in one company, and then the next month onwards, I joined another company. So, between these changes is when the filing happens. So, how do we sort of handle that? Is it based on the previous company, or would it be based out of the current company?
So you have to get Form 16 from both the employer, because even if you have a service of just 2 months also before ending the particular financial year in the new company, the employer is bound to issue the Form 16. So you can take both the Form 16s and club the income together and file it. Because in the income tax filing, in the head of salary, there is an option to show multiple employer.
Say, for example, I lost, say, a particular amount got deducted in the month of, for my previous financial year, but I would be losing out on that amount when I leave the company, right? Or can it still be refunded?
You mean the income tax deducted at source, right? You are talking about TDS. It is very much, because all the taxes which is deducted by your employer or any entity, it is accounted under your PAN number. So in the income tax department, whatever taxes the employer, different employers deducts, or some entity deducts the taxes, all the taxes, even the direct tax what you pay through your bank also is accounted under your PAN number. So when the tax filing happens, when you are making your income tax filing, all these deductions will be reflecting under the your PAN number when you take the Form 23A. Form 23A is what you normally extract right before filing. In that, it will be reflecting, and if it is not reflecting, you have to contact your HR and make them to refile. And it is all online process which can happen anytime. It can be easily reflected.
One quick question on the capital gains. What we are getting. So you are saying like till 1 lakh, we don't have to pay anything, right? Is that what you're trying to say, or whatever the salaries we are getting from the company, compared to that, this 1 lakh, it will not come in. I mean, if I am a person which is who is coming in the 30% tax law, So if I'm gaining somewhere of capital gain as 1 lakh, so I don't have to pay the tax, right? Extra for that.
Yes.
Okay.
So each category of income, like salary income, income from house property, business income, all these are treated separately. Capital gain also. So in case of capital gain, when they are saying 1 lakh rupees exemption, it is exclusive for capital gain only.
Okay, good. Thank you.
Chata, hello.
Yes.
So can you answer that last question that was asked in the chat regarding HRA?
How to submit the rent receipt to claim HRA if I am not staying in a rented house? Most of the people submit fake receipt, 96,000 INR because of the wrong. That is something which I would not recommend because it is very easy to create a rent receipt or fake receipt, and so it's better to avoid that.
Okay.
Jada, I have one. Yeah, you can ask.
Yeah. Hi, Jada. Can you explain on dividend income?
Dividend income of company, actually, dividend income is basically share of profit which comes from your company, private limited company or limited company. Till last year, it was like up to 10 lakh rupees. Dividend income was excellent, but this year budget, I think dividend income is taxable. Let me just. Effective from 2021 onwards, dividend income from shares of any company is taxable with the shareholder. So you have to pay income tax on the dividend income.
What is the limit? Like a limit for the tax?
Limit on dividend tax on?
Yeah, tax. Yeah.
Any amount is taxable now. Till last year, it was like exempted, but this year onwards, it is taxable.
Okay, thank you.
Jada, I have one question.
Yes.
So you said about the standard deduction, right? 50,000. So that is applicable for all the categories, or is it limited to some categories only?
Individuals and HUF. Individuals can only go for standard deduction. No, not for business or self-employed. Individual tax file. If you are an individual tax filer, tax pay, you can deduct 50,000.
Okay.
Any more questions? Robin, you are there?
Yes, Jada, I'm there.
Hi. Actually, Robin was one who was contacting me always for taking these sessions on financial planning, tax planning. Thank you, Robin, for giving me the opportunity. Also, I would like to appreciate you on the flyers you are preparing. I like the pictures what you put on the tax planning, or this time on tax financial planning and the tax planning. It's very nice. Very relevant also. So,
indeed, it is our privilege. We got such a person like you for these 2 sessions, and you was wonderfully. All the participants, surely I'm very sure about that. All of us got benefited out of your sessions. Thank you, sir.
Oh, thank you. But frankly speaking, I am not a tax expert. It's all Google and discuss. But some personal experience. Just I thought sharing so that it could help you in your tax planning. Housing loan and more of investment. It's always better go with a proper tax advisor or a chartered accountant who can do a better tax planning for you. But financial planning and investments is something which personally I do for many of my clients. Yeah, thanks for all your patient listening and encouragements. Thanks. Maybe we can wind up. Teres, you want to say something?
Yes, Cheta. I'll just quickly wind up.
Yeah. Maybe
so,
last time we were a little short of time and in a hurry we did like that. But maybe we can take 2-3 minutes to just for a prayer time and we can wind it up.
Sure, Cheta. Cheta, would you like to pray?
Yeah, sure.
Yeah. So I think I'm not very good at taxes and finances, so I was just wondering if even donations could save you taxes. Tito Chetan being an active Jesus Youth as well as the director of AMJ Stokes, I think we are lucky to have had a pro to speak with us on financial planning. Thank you, Cheta, on behalf of Jesus Youth Bangalore family. And I think all of us who have joined have benefited, and we'll definitely have the recording shared. So it is definitely going to be a benefit for all those who hear those recordings as well. And I think none of us would forget that verse that you've shared, that is Romans 13:6. Pay what you owe. If they owe you respect, you pay respect. If you owe respect to the government, you pay it. And if it is money, then pay it. Thank you once again, Cheta. And we, on behalf of the Jeva Bangalore family, we look forward to hearing more sessions from you. And I think all of us can quickly recite 3 Hail Marys for the intentions of Tito Chetan and his family, after which Tito Chetan will lead us through a short time of prayer. Hail Mary, full of grace, the Lord is with you. Blessed are you amongst women, and blessed is the fruit of thy womb, Jesus.
Holy Mary,
Mother of God, now and in the hour of our death. Amen. Hail Mary, full of grace, the Lord is with you. Blessed are you amongst women, and blessed is the fruit of thy womb, Jesus. Holy Mary, Mother of God, pray for us sinners, now and at the hour of our death. Amen. Hail Mary, full of grace, the Lord is with you. Blessed are you amongst women, and blessed is the fruit of thy womb, Jesus.
Holy Mary,
pray for us sinners now and the hour of death. Amen.
Amen. Tito Cheta, can you lead the prayer?
Name Father, understand the Holy Spirit. Thank you, Lord, for all of us to give an opportunity to gather, to think about your blessings. Lord, we understand the wealth, the riches, all the facilities what you have provided. We are just a faithful stewards of all your blessings. None of these are ours. It has to be utilized for the benefit of the needy others. Jesus, like how you provide us with clean air, fresh water, money is also just a means of our livelihood, Jesus. Lord Jesus, never ever make us so rich that we will forget you or betray you. Jesus, whatever you are giving, we should have the big heart to give it to others who are in need, who are not fortunate, because none of this will help us unless all this wealth and riches are utilized for good of others, the society, and the nation. Like Jesus taught us, if you have two shirts, share one among others. Jesus always gives opportunity. It grows into multifold. Like he has said, bring to me all the tithe so that my storeroom overflows, so that the blessings cannot be stored in the storeroom. Jesus, we believe in your words. Whatever you have given us, once we share with others, it grows multifold, which we cannot hold in our storerooms. Jesus, give us the confidence, give us the faith to believe in your words, trust you, to live a life which is guided by your Holy Spirit. Amen. So wish you all a good night. God bless you. Take care.
Thank you.
Thank you, Jeta. Thank you.
Thank you, Cheta.
Okay, see you all. Bye.
Okay, bye. Please with you.
Can I leave?
Yes, Cheta. Thank you.
Okay.
Thank you.